Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage.
Hey,
Hello.
Matt, how's it going, man?
All good. How are you?
I'm good.
I'm good.
Excited to chat with you a bit.
Yeah, same. I've followed you for a long time, so it's cool to meet you.
Yeah, I think I just learned about you the other day, man. Congrats on the payout, obviously.
Thank you very much.
I think we
Yeah.
could share a little bit about our journeys. Maybe you could tell everybody. I'd be interested to know too how you got into trading and like how you were able to get such a big payout. Because just between me and you probably know how difficult it was, which not a lot of people probably understand how hard it is. And I know obviously there's everybody out there is trying to hit those huge payouts.
Yeah. Well, yeah, I think difficult is the right word. In my opinion, the big one just felt very draining. That's the word I'd use, like the constant stress, because I know you've had your account for a while, but I had mine for 9 months almost.
Oh wow.
And yeah, so I took my time, and I like to think I'm quite patient, but it was a draining process. But let me maybe track all the way back then to give you some short introduction. I started trading 5 years ago, straight out of high school. Actually, I was still in high school. Got into it due to a friend who was in this trading pyramid scheme kind of thing, and he actually introduced me to it. I didn't really bother the pyramid scheme too much, but I was immediately hooked on trading. So the next year, almost year and a half, I was just completely obsessed. I think this is probably the phase where most of the viewers are currently in, where I was just so obsessed. So I was trying to learn everything. I was looking at all the YouTube videos, following all the great traders, reading up about it. And I was just doing all of that, just trying to get as much info as possible, just trying to understand what was going on and putting the reps in. But I didn't manage to make anything work during those first 1 years and a half. And so I decided to take a break for a couple months. And so almost 6 months it was. And to me, this really had the same effect as when you're in school and you're studying for an exam, and the night itself you're filling your head with all the data and you keep pushing, but you don't really understand it, and then you go to sleep, and when you get back the next morning and you gave your mind some time to process all of it, that's when you truly understand it. The break for me had kind of that effect. I mean, I didn't really learn anything new, to say so, or very little. And in the difference between being unprofitable and being profitable, for me, it was more about structuring that data that I already had, and I did that, subconsciously in those 6 months. And then I came back, and I had some money because I used to make websites and stuff, and so I had some money. But to the funded trader or my forex funds or the funded trader, don't recall. But two of those accounts was able to pass one, and then from there I just got the ball rolling, made some money in CFD firms, but I think the cap there is way lower than it is with the futures firms. So then when I saw the big payouts on the futures firms like yours, I just felt like I needed some of that as well. So I started transitioning, and then now I recently blew up due to the big payout. So there was 713,000 USD, big apex payout, and that kind of blew up.
Yeah,
But
so I think it's you pointed out some really important parts, because I went through that cycle of taking breaks, coming back to the market, and this is probably something that not a lot of viewers are going to understand until they're further on in their journey, is that when you're in that cycle of education, right, you will find a point where nothing you study is going to add anything to your trading, right? You're going to go
Yeah.
through those periods where it feels like I need to learn more and more and more and more. But I just found that that led to just me burning out a lot because there's so much information online. It's like, all right, I read this book. What's the next book? What's the next chart strategy? What's the next execution strategy? What do I need to learn next to become profitable? And then it wasn't until I stripped everything away and just focused on trading itself and realizing
Yeah.
like you're going to have losing days, you're going to go through struggling periods. It's completely normal. That doesn't mean that you need to learn something new. You just need to learn how to balance your mindset and your emotions to get through that period because you are going to consistently go through those rough periods. And I was just having this discussion with a couple other people yesterday. It's just part of the game. You have to go through those necessary periods of drawdown to understand like this is very uncomfortable, but nothing that I learn is going to help me get out of this other than me just showing up to the charts every day, putting in the work,
Yeah.
having a consistent
Fully
process,
agree.
and managing my risk, right? So
I
I
think.
definitely want to talk to you about like the
Yeah.
draining
Go ahead.
aspect of managing those accounts because for me it was a much shorter time frame. I think I did it in
Yeah.
like 4 months or 3 months, but the hardest part was really trying to keep my mental in control
Mm-hmm.
enough to not
Yeah.
blow the accounts because those whatever 8-day payout cycles, right? So
Mm-hmm.
one of my payouts got denied. I
Yeah, same.
made sure that I didn't go on tilt the next 8 days because I know that there's a lot of traders that will likely do that, right? They get one payout denied and all of a sudden it feels like they need to make up for that lost time. Like, what was your biggest focus and goal when trading those Apex accounts to try and get to that one big payout?
Yeah, there's a few things there, but maybe one thing that immediately stands out is even when trading the Apex accounts, I took some pretty big breaks. So sometimes I didn't trade those accounts specifically for 2 weeks even, and so not a single trade because for those accounts, to me, it was just so important that I was sharp and that I wasn't going to fumble anything. So even if I really felt that my mind was still drained and I really felt that because willpower is kind of you start with a full tank and then it lowers and lowers and lowers and sometimes you just need some time to recharge that willpower, to recharge that discipline, and that's kind of how I looked at it. And I just didn't want to make any stupid mistakes, so I don't mind losing trades, but I would have really mind if I did something I shouldn't have and lost money because of that, especially since those accounts were so big, so the consequences were as well. And so I took regular breaks. That's one thing. And then another big thing in trading in general is that I didn't need the money. And I think that really sets you free as a trader. And also just because I didn't have to trade every day. And I still made enough money through my other firms, even in the time I was running up these Apex accounts. And I think that's like a underrated aspect almost, that it's incredibly hard to trade when you really need the money, and rent is due tomorrow and you got today to make it. That's a
Yeah, it's like how do
recipe
you
for
end the day on a
disaster.
loss or how do you end the week on a loss when you have bills to pay? It's
Yeah, and
extremely
you
hard.
start.
And I don't think I would have been successful if I didn't have, I set aside almost 2 years of expenses. That's probably more than
Yeah,
what most people need. Most people probably need 6 months at least.
at,
But
yeah, at
I'd
least
say
I'd
a lot
say.
of traders that come into the space because the barrier to entry is so low that they don't even have an emergency fund. Maybe they don't even have a source of income and they're trying to make this work.
Hmm.
So, I think the
Yeah,
people at the
that's a
top,
big thing.
obviously you,
Like, go ahead.
every other trader that I know that's really made it has never relied on trading as their ticket out, right? A lot of them are business owners. A lot of them have other jobs that they're relying on to have a source of steady income. And then trading is just like an ancillary thing, which it can take over your full-time income, but you can't
Hmm.
treat it like it's a full-time job. And that's where I kind of went wrong too, because when I went full-time, I had a first two months that were really great, right out of the gate.
Hmm.
And then I probably had 3 months where I was not making any money, break even. And that was a mental struggle for me because I
Yeah.
was trying to do too much in the markets. I was spending like 8 hours a day in front of the screens. And then I had to take a little bit of a break and say, what got me the success. It wasn't me sitting in front of the desk for 8 hours. It was me trying to pick and choose where I'm trying to participate with the market and act like a sniper and not, with a shotgun, essentially.
Yeah, fully agreed. And that's also one thing I did during my 6 month break, actually. So during the break between unprofitable and profitable, I started really running up the website agency, so the web design agency, the CRO it's actually, but and it's only when that started really making decent money, then trading became so much easier for me. So it's exactly the same story, right? The first year and a half, I kind of needed it, and then I took the break and I decided to really put some effort into the agency. And then once the agency was running pretty well, that's when I got back to trading, and that's when it all clicked for me. So I think part was because during the break I was able to kind of process the data, but another part of it was that when I got back, I had enough money that I didn't have to trade today or tomorrow or this week if nothing came up. So yeah, fully agreed.
Yeah. So I do want to ask like one more question as far as the Apex payout before we get into maybe some charts.
Yeah.
For me personally, if I tried to do that Apex run, even just 2 months earlier or 2 months after, I don't think I would have had the same level of success because the market conditions, they were extremely volatile earlier this year. So I was able to have very large returns on the risk that I was taking. So for me personally, I'll let you talk about your risk management. But for me, I pretty much was able to get the trailing drawdown to stop on like the first 2 days on the Apex accounts, which gave me a huge buffer of not needing to worry about blowing up the account. And then I didn't really size up. I actually didn't really size up at all. I was risking like $250 to $500 per trade initially on all the accounts. And then when I got to like 10 to 20K, I would risk like $1,000. But I never really went past that. So really, if I, I guess went through my stats and looked at the total R value that I made in that 4 month time frame, it was probably over 100 R, I think, but that's because I was scaling in. So I would add a position at $1,000 risk. If I get that position to break even, I was able to add another $1,000 risk. So I could possibly turn a 3R, 4R trade into 6 to 8R in a day. But I don't think that would have been possible if I had just tried it 2 months after that period. Because even lately, I haven't been trading the markets as actively just because they've been in tight ranges a lot. Like we've kind of been chopping up and down through the summertime. And a lot of traders just have to realize like you can't just aggressively trade the markets all the time. Most traders will make the majority of their money in a short span of time. So maybe you could talk about your risk management, how you approach that. And, were you just taking advantage of like small pockets of volatility? Maybe it was like 1 month where you had a really big month and then the next month it was kind of slow.
Yeah, that's pretty much what I did. So at first when I got the account, I hoped to get them to $1 million. That was kind of my aspiration. And in hindsight, it's kind of a silly goal to pick a random number and go for it. But that was my goal. And I did so with some pretty large. So at Apex, of course, you can only risk 30% of your balance per trade. So I never went above that. But I did stay close to it. So I did scale my risk up, especially in the beginning. I was risking 30%. And I probably wouldn't have been able to pull it off if I started 2 months earlier as well. I did get kind of lucky in the sense that I'm usually a bullish guy on NASDAQ. But that specific time period, I really was looking for sells, and I was able to pretty much capture 2 days of bearish movement, total of 500 points it was. And I was able to catch all of that, multiple trades, and 1 to 10 are on some of those. And those first 2, maybe 3 days got me up to $50,000 in profit on the 7 different accounts. And then from there, I was just trying to grow them a little bit. less quickly, a little bit more slowly. But those first couple of days, I definitely got lucky in the sense that I was looking for big moves when there were. And so
Yeah,
yeah,
I wouldn't necessarily say that's luck.
yeah,
It's you
luck might be,
recognizing,
yeah,
the market condition for a big run, right? And those
yeah,
opportunities just come rarely. They don't come all the time. And I think that's
that's
where a
the,
lot of traders trip themselves up, is they're always looking for the big runs. But
yeah,
when
exactly.
it's
So
kind of like more of a gut feel where you've seen some of these setups pan out and you've seen them run to their targets
yeah,
very quickly. That doesn't come easily for a lot of people. And I think people expect it too often, right? I think they expect nine out of their 10 trades for that one
yeah,
crazy volatile move to happen, when it's more like 1 out of 10, right? They're looking at it the opposite,
yeah.
where it's like
It doesn't happen a lot, right?
most of the time we're just hitting base hits, and then that 1 out of 10 or 2 out of 10 trades is the one that really runs in your favor.
Yeah, yeah, exactly right. And I think especially on Nasdaq, and I also like to look at the fundamentals, but just a key characteristic of Nasdaq is that you have these slow chops up and then a quick move down, right? And a slow chop up and a quick move down. And I was then able to identify both on a fundamental level, I was looking for big sells, and then on technical level allowed me to catch those with pretty tight stop losses, and that's how I was able to get these accounts to some solid profits. Is just like you said, and so the couple of the first days I was able to get solid profits on these accounts, and then from there it's a lot easier to scale those up once you have such a nice buffer, and then I could take it more slowly, and also did. So yeah, that's pretty much how I approached those, but my risk did scale up. But I also traded all the accounts separately, so I think that's
Oh, okay.
a
You
big
traded them all
difference, right?
separately? That's interesting.
Yeah, so in the beginning I copy traded them, but for me, because I did risk, for example, 20% of the profit, some of those accounts were up 100, 150, one was even up 250, so $250,000. If I then risk 20%, that's 50K. If I do that on 7 accounts, that's too much money for me.
Yeah.
I wouldn't feel comfortable with doing so. So that's why I traded them separately, but I did scale the risk up per account. I just started trading them separately.
Yeah, I think either way makes sense to me. Because if I was, let's say if I had a $50,000 balance in each of the accounts, if I risked 1 to 2K per account, across 20 accounts, it's still $20 to $40,000 in risk versus
Yeah,
just one account. But I think from a mental standpoint, it probably is easier to not lose on all 20 of your accounts. Maybe you want to take one big
I
loss
think
on one
so.
account, and then you're like, the other account's totally fine. I think there's so many different ways that you can approach risk management that I think, technical analysis. I don't know if you're what type of trader you are as far as strategy. Maybe we could discuss it when we hop on charts.
Yeah,
But for me, technical analysis is like kind of like rigid. Like there's certain ways that you can approach technical analysis, but with risk management, there's like a million different ways that you can approach risk management. And my risk management is never just like hard and fast, where it's like I'm risking 3R on this trade, or or I'm aiming for 3R on this trade, or I'm going to move my stop loss once it goes X amount of points. It's always
Yeah, I
different.
got what
Every
you're
single
saying.
trade for me, at least from a risk management and trade management aspect, I can't remember the last time I could tell you where I had 2 trades that were exactly the same. I have 2 setups that look exactly the same, but the way that they pan out, they're all unique. Every single trade that I've taken is very unique on its own. Yes, there are similarities, and that's kind of like the pattern recognition, but I've never had 2 trades that were like identical, right? And
Yeah,
that's
I
the
got
hard
what you're
part of
saying.
trading, is like there's certain patterns that you look for, and then from there, it's more of management and understanding that the markets are always different.
Yeah, I think with risk management there are certain principles that you have to stick to and that are pretty universal, but there are so many different ways to apply those, and so different people will come to different solutions even if they believe in the same fundamental principles. I think that's especially true in risk management.
All right, so obviously these people are getting impatient in the
Okay,
chat. They
then.
want to see charts. Apparently, we are not
Sure.
real traders if we're not showing charts. Okay, so first of all, what I'm going to say is today is like the last day of the month. I don't know about you, Math, but for me, going into the last day of the month and the last day of summer, especially when we have a holiday on Monday, like to be honest, like if you're listening to this, why are you really trying to get into a trade on a Friday? That's just my opinion. Take it for how take it how you want. This has saved me tons of money throughout my career because what would happen to me was I would have a really great month, right? Let's say if you caught this long on S&P or NASDAQ going higher for the rest of the month, I would end up giving it back on the last couple of days just because I was so impatient. I could not sit still and I was just constantly needing to be in a trade. So I would have a really great month. I would be up, 5-10% of my account. And then in the last 2 days, I would give it all back because I just couldn't take a day off. And that's exactly what we were talking about on the call just now. Like, I know you guys are extremely impatient. You want to make trading work by Monday, right? You're trying to leave your job before, right around Labor Day. But that's
They
not
already have probably.
yeah, it's not the right mindset to have. Yeah, maybe they've already left their job and they're trying to, make their rent payment and they don't have any money in their account. But
Yeah.
I'll go over my analysis real quick. So obviously
Sure.
yesterday we took out all-time highs on ES. This alone is making me sit on my hands because it's the last day of the month. So again, I'm still bullish on index markets, but I'm not bearish, right? So what does that mean? That means I just sit still, okay? Because we've taken out the all-time highs. And what are the chances that on a Friday, on the last day of the month, that this thing is going to keep going higher, right? If we look at the monthly candle, there's only 8 hours left on this candle. How much more do you think this candle is going to run, right? Because if you look at all these other months, typically in the last day or whatever the case is, it doesn't really go anywhere. It just closes, and then that next monthly candle, wherever it opens up, is like a 50-50. So
Today
a
we
lot of
do
times,
have this CPI coming though. So we do have CPI or core PCE CPI in a couple minutes. But yeah, I agree with the sentiment. I'm also not really looking at anything
yeah, and
anymore for
then
today.
as far as currencies, it might affect the currency market because it is an 8:30 release. The euro's been in a range for I don't know how long. It's been in a range all of August. So a lot of people that follow me are looking for trades in the currency markets, and I'm honestly not really touching them. And
Me neither.
it's very difficult to kind of get people to understand that you don't need to trade every market every single day. What I look
We
for
agree.
personally, I know you trade NQ. I pretty much trade every single asset. Whatever asset looks the best to me. So at the end of the day, I'll just flip through all these charts. And if something doesn't really jump out to me, where I'm like, this is a plus setup where I definitely can risk a lot on this one specific trade. If I can't easily discern that just by flipping through my charts, if I can't discern that in like 30 seconds to a minute, I don't want to trade that market. When it's very, very obvious. So do you trade ICT, Math?
I wouldn't say so.
Okay.
But I think some of his principles are so fundamental that pretty much anyone uses them.
Yeah, I think, at least if you don't go down the rabbit hole. So what I'm looking
Yeah.
for typically on a daily basis is just, it needs to be trading into a strong daily level. So like here, we traded down to a daily fair value gap and then rejected. That next day, I'll be looking for longs. So yesterday, we did have a nice bullish run, but now we're trading back towards the weekly open. As in, if we look at a weekly open, it basically hasn't gone anywhere, right? So what are the chances that on the last day of the week and the last day of the month, that this candle is going to decide where to go and if it's going to expand higher or lower? To me, it almost feels like it's just going to close near the open. I don't know. But, when I look at NQ, at least,
kind
I
of
think
the
it's
same.
somewhat bearish.
I have kind of the same outlook on things. I think, because someone mentions also the Lisa Cook court case, and it's pretty pretty cool that someone's up to date about the fundamentals. But I think that's pretty important narrative, where you have the Trump versus the Fed, where Trump is kind of pressuring them to lower the rates, trying to fire as many people as he can. But for now, they are not doing so. And to me, that signals two scenarios. To me, and it gets back to what I said earlier, but I'm looking for either a slow chop up as we get closer to, for example, Jerome Powell getting out of office. We know the next Fed chair will probably be way more inclined to lower the interest rates, as that's what Trump really is looking for. So as we get closer to those, I expect price to just chop up higher and higher, with the risk of a very big down move every now and then when something really crazy happens. Because in my mind, even the lower interest rates and the more, the different Fed chair and all of that, it's already kind of priced in. And as long as nothing major happens, I think we'll just trend up, slowly but surely, but with the big risk of a very big sell-off if something were to happen, where the Fed does decide that the next chair will be more hawkish, or so. I think
Yeah, so I know you
kind
wanted
of
to talk
what
about
I'm looking
fundamentals. Like, to me, when I hear that, it does sound like there's more uncertainty than typical scenarios, right?
Yeah, sure.
Do you typically look for fundamental scenarios where things are much more clear?
I try to keep. I tried, for example, with this one, I just try to keep it in mind and try to understand the possible scenarios. That's pretty much just what I'm trying to do. So, for example, for now, I know we're probably chopping up with the risk of a sharp down move. And that's just the way I look at these things, and that's how I use them. And then obviously I like to stay out of trades during high volatility news. So the Forex factory stuff, I also use that, but on a deeper level, I just like to kind of understand the different scenarios to understand the fundamental risks I'm exposed to. That's what I'm trying to do.
Yeah, and I like how you have two different scenarios panning out, because for me, I'll always try and paint both pictures, because if you don't, let's say if you only paint one picture, it often leads to you over risking and being way too confident in a trade. So when you get stopped out, you try and re-enter because you think you're right, and it's very difficult to accept any specific loss. So whenever I'm entering a trade, I'm always trying to paint both pictures. Like, what's going to happen if if one scenario pans out? What am I going to do? And what am I going to do if my trade idea doesn't pan out? Typically, if I have a stop loss in place, I try and trust that stop loss, because I had a very bad habit of adjusting my stops wider because I thought I was right, and then instead of taking a small loss, I took a huge loss.
Yeah, for that reason, I don't move stop losses.
Yeah.
So really never I move stop losses, because it can be a slippery slope, and I try to, the set and forget mentality. Just get your points, look at what your system tells you to do, and then just stick to it. That's how I approach things. So I also don't like moving a stop loss, take profit, anything like that.
So we got news out in what, a second?
Yeah.
So right now we are at the weekly open on NQ. People are saying the market's bearish, but when I look at the daily time frame, nothing really about this is bearish, at least the last couple of days, right? Because we've respected all these lows in here. We have a swing low, and each day it's printed higher. So, for me, I'm not really bearish on the market. Like you had mentioned, you're probably going to drift higher, maybe to all-time highs on NQ. But typically markets, right? Like especially index markets they're designed to trade up and to the right. And if this one specific asset is underperforming, they typically just replace that company with another company that is performing, right? So I know a lot of people, they're always trying to pick a top or trying to go against how the market is driven. And I think if you're trying to become a trader, trading index markets is probably way easier than trading forex markets, because
Fully agree.
forex is much more 50-50, where there's short opportunity and long opportunity. And it's mainly just kind of stuck in a range. But index markets, they're designed to go higher, right? People are investing their retirements into these funds, and they're not pulling them out, right?
Yeah, I think that's a huge benefit of, and that's also one of the reasons I only trade in, or I mostly trade indices and gold, even when I'm trading CFD firms, is because in general, over the long run, this thing is going up, and there's really not much debate about that. And so I think that's a very useful characteristic, and that's also why I tend to be way more bullish, especially for some of the larger trades. I think it's, you're fighting the trend, the overall trend, the long-term trend. If you're selling, sometimes that might work out. So I'm not opposed to selling, but you got to know that over the long run, these things are going up. Always
Like when I look at my stats, I actually want to see that, maybe 70 to 75 to 80% of my positions were long positions in the index markets. Whereas, I very rarely will short the market.
Yeah,
I just
exactly.
don't
I'm at
like betting
77.
against the index markets. Unless it was,
Yeah.
Earlier this year, when obviously the headlines are driving a lot of the volatility that was pushing the market lower, right? When Trump was basically on the Twitter horn nonstop, those markets were dumping off very aggressively. And that's kind of the opportunity to go short. Usually when there's headlines on both sides, typically the market will just continue drifting higher, right? Because there's not enough real impacting news headlines that are hitting the market.
Yeah, I agree. Yes, there are opportunities to go short, and I think especially when trading Nasdaq, for example, these can be very, very sweet, and that's also why they are so addicting to some, is because you can catch 200, 300 points in minutes if you're
Yeah.
lucky to say so, and in a buy that will happen less. So the big moves, big rapid moves are often shorts, but that doesn't discredit the fact that generally we're going up. So generally, I also like to be bullish, and yeah,
So for me,
I
I
share a
think,
lot of your perspectives on the chart today as well. I also
yeah,
don't
yeah.
really.
So before I hand the screen over to you, what I would look for a long would really just be to get above this bearish fair value gap. I mean, obviously we're trading down to a daily level right now, and with the rollover of the new month, it makes things very difficult for me, because when I look at the monthly chart right now, right, we took out the monthly high. Typically, if I'm bullish still, even the start of next month, I actually wanted to trade it lower, right? But that doesn't mean I'm going short on the market. It just means I might wait a week or 2 weeks to try and position myself long, and then try and ride that trend higher for the remainder of the month, right? So a lot of times I'm sacrificing the end of the month, and I'm sacrificing the beginning of the month on that monthly candle, because I know a lot of it can just be manipulation and chop, right? So that's my perspective. I'm looking obviously to remain long on this market, and I think as long as maybe we respect the swing low that's here, which was put in on the 26th of August, then I think we're going to continue higher and possibly to the all-time highs. That's just my perspective. Again, I'm not trading today. Well, yeah, that's basically how I summarize the markets at the current moment. Is I'm still bullish overall. I don't think really anything is going to change my opinion of that until the market starts shifting lower, right? I need a market structure shift that's telling us the market's going to turn around. I hate picking tops. That's not really something that I do. And even when these candles are printing, consecutive bearish days, I tend not to do anything unless I have a very clear target on the downside. what I'll do is just sacrifice those couple days, and then when the market starts bottoming out, then I'll just go back in and reposition myself long. Right. So part of my trading is realizing that I'm not trading every single day. To me, that I don't know a lot of people that can do it profitably. I don't know if you probably don't trade every single day either. I'm just looking
I trade most days, but I pick the setups differently. So, for example, for today, I did take a buy. And I actually took two, one win, one loss. But those are very short-term trades. So those were for 15 points each. And I'm just trying to get in, trying to get out. Because then I think it is... I'm currently pretty unsure about what's going on next on the for example on the 4 hour, maybe on the 1 hour time frame. I'm pretty unsure, but I know over the long run we're going up, and I think the 1 minute then it does provide more opportunities. So I'll
do you want to share your screen quick?
Yeah, I'll share my screen for a bit. Okay, is that working?
Yep.
Okay. So I'll just start for the daily. I think, as I've said before, I said many times, I'm bullish long term. Even on the 4 hours, I think if I were to draw something, then I'd also say I'd expect something like this probably to happen. So this is long or semi long term what I'm looking at for these next week, next couple of days. But that doesn't mean that I'm always able to find a nice entry that aligns with this with this bullish bias, and that's kind of where I'm stuck now. Is I do want to buy, but I just don't really see anything on the 15-minute that really indicates me to buy. I think
like for me,
either on the 15
for me,
minutes,
I like
I'll be looking,
when we're like,
yeah, go ahead.
I like when we're like crouching below like all-time highs,
Mm-hmm.
and we know we have a specific target where we can aim for. But when we're at all-time highs, it makes things much more difficult because you run that risk of people getting trapped on the long side, right? And then you get that massive flush lower. And it just makes things much more difficult when there isn't that like high time frame target that's above you.
Yeah, exactly. And to me, this is just it's pretty unclear, and I don't like to trade when things are unclear, because sometimes things are clear, and then you can just make. I prefer sizing up on bets I think will work out than taking more bets with a lower expected value.
Yeah, exactly.
That's kind of my feeling about this, and this just to me it's not that clear. So I mostly trade Wyckoff, and so some people say it's very related to ICT. So it's accumulations, distributions. So maybe if we see something play out here like so, and then we have the spring break, then I might look to catch moves like this. So I like to take just take trades here, and just try to take them to this high, to say so. But right now I just don't really see it. And I'm just staying out as well until maybe we break this high, and then we can retrace into this, for example. Then I might be looking to buy here. Maybe we get a nice accumulation here, and then I might be looking for some buys.
Yeah, somebody's asking, just to clarify, are you determining if a market is clear, unclear prior to market open? For me, it is. Like, for me, I try and determine if a market is clear or unclear based on a daily closure. So I'll sit down at the end of every night, 6 p.m. to just review my markets. And you should, when you get enough experience in the markets, you will start to recognize opportunities that are set up in your favor. When the daily time frame is kind of just chopping around, like, yes, we are taking out all-time highs, but then we're tracing into them, and then it's just slowly drifting higher, and it's very choppy. Those are typically conditions that I don't aim for. I'm looking for those sharp moves higher, which is what Mathe is probably looking for as well. It's like, how does that market set up, and how does it, I guess, generate enough interest where it is going to have that expansive move higher? But
I don't mind being in. I don't mind being in on the slow chop up, to say so. But just because I'm bullish doesn't mean I'll do. I'll set my trade and I'll do something like this. You still want to be somewhat accurately in your entry, and you don't want to just buy and hold.
Yeah, you're just recognizing, like, you might have to hold that trade for much longer than you typically would.
And endure more drawdown. And so it just gets back to that mindset. I prefer to just take trades that I feel very certain about, because, for example, now I know some people that just buy when they are bullish on the 4-hour, bullish on the daily. But I just like to have everything in line, so that I don't have to endure that drawdown. I don't have to be in there for days or weeks. I like to time them well. It's pretty basic.
I think one thing that helped me out a lot was because I would get caught off where I would have a bullish thesis, and then I would find myself shorting because the intraday price action looked bearish. And then over time, I just realized, like, this isn't working out for me. I need to trade only when all the conditions are in sync with my thesis. So if I have a bullish thesis, I'm only trying to trade when that lower time frame structure agrees with that bullish thesis. And if it didn't, I would just completely avoid it, which is kind of the scenario I'm in right now. Is the market looks somewhat bearish to me intraday, but I'm bullish long term. So do I want to go against my plan and go short? Not really, because I've lost way too much money trying to do that in the past. So I just completely avoid doing it. And that leads me to sometimes sitting on my hands for days or even weeks. But when I am active, like, I'm very active. But that's only because I have a very strong opinion of where the market is going. When I don't have a strong opinion is when I back off and I don't do anything. And yes, it sounds very boring and it sounds like I'm not a trader, but people do need to realize, like, this is what profitable trading is. It's not having to be in a trade all the time. And when I feel out of sync, that's when I lose the most money. So, you have to recognize that what's causing you to blow up your accounts is either you're not in sync with the process or you're just trying to do too much, right? And it goes back to the topic of having money set aside and not having to worry about making money in the markets, right? Because too many people, they have to trade, they have to be in a trade, they have to be in the market all the time. And the way that I look at it is that the more time I spend in the markets, the more I expose myself to volatility and the more I expose my capital to fluctuations in the market. Like, I'm trying to be in and out, not very quickly. Sometimes I'll have a trade idea that lasts 2-3 days, but I'm not trying to overstay my welcome in the markets.
Yeah, I fully agree. And for me, an eye-opener about this, and I know these are investors, not traders, so it's slightly different, but Berkshire Hathaway, when you have Warren Buffett and Charlie Munger, arguably some of the best investors ever, they sometimes over 50% of their portfolio is one stock. So it's one thesis, and they wait and they wait and they wait, and they don't take any trades, to say so, for an entire year. And then when they get that one opportunity, they size very largely in it. And I think that's what I've learned to do more as well, to just skip all the small things you're not too sure about and just go in on those couple things you are pretty sure about. And that's also how I made most of my money. It's, as you said before, right, 90% of my money comes from 5% of my trades, and
Yeah.
I don't have to trade the other 95% then, and that's kind of what I'm trying to move towards.
Yeah. I don't, maybe not a lot of people are going to really understand this, but most of my profitable years are made in less than half of a year. So 6 months
Mhm.
6 months or more out of a year, I'm basically, even though some months are profitable, maybe I'm only ending the month with like 5R. It's not anything
Yeah.
crazy. I'm just trying to survive. And then there's some months where I'm extremely outperforming all those other prior months. So maybe I might be running with a 70 or 80% win rate throughout the month, and I end the month with 20R, right? That 20R month can carry me for 2 to 3 months, right?
Yeah.
And I think there's a rude awakening for a lot of people that are trying to go full time, that they're going to realize like this is a lot harder than most of you think, and it's not just like a instant or endless ATM machine. There are some months where it feels like that, but you can't let that get you overconfident, because then it leads you to mental mistakes, right? There
It's
are
not a
some months
reasonable
where it feels like,
expectation. Yeah.
yeah. There are some months where it feels like, and I had this discussion yesterday. When you're trading really well, trading is extremely easy. But when you're trading really bad, that's really where the test of character comes in. Like, do you have the mental fortitude to make it through this market? Like, a lot of people can't even sit on the stream and listen to us chat about markets, right? Like, they have zero
Yeah.
patience whatsoever. And it's more so, I think it's because of the way society is moving, where it's more and more people's attention spans are getting shorter and shorter, that they can't even sit down and read a book for a very long time, or they can't even sit down and be in their own thoughts for very long, right? If that's you
Yeah.
listening to
Totally.
this, it's extremely hard to be in a trade and not give in to whatever is going on up here, right? Because this is where everybody is messing up, is inside of their head. When they place a trade, now all of a sudden they're running through all the different scenarios of what might happen, instead of focusing on how to trade that one setup properly. Like, don't adjust your stops when you don't need to. Don't size up too much when you don't need to. And it's just about having the balance to make really good decisions in the markets, which is very difficult when your attention span is very short, because
If you
every
want
fluctuation in the
action
market is like,
whenever,
I need to do something else. And it's like, try and cut down the amount of decisions you have to make.
if you want to be able to press the button at any time, then Vegas is probably the place to be. But in trading, that's just not. You can, it's all about picking when you are sure. That's, in my opinion, what it's about. But yeah,
And
that's.
part of it is understanding your own personality. Like, I thought I was going to become a swing trader when I first entered the markets, and then I realized that I didn't have the patience to hold my trades for 2 to 3 weeks. And then I went to day trading and realized I was too impatient, that I would overtrade, right? So now I kind of am in the middle. But all those, all the time periods that I spent trying to learn both of those methods, it kind of led me to like this, I guess, short-term swing trader, where I'm trying to capitalize on price action within a specific week. But if I don't get my setups on that specific week, I don't really care. Like, I don't need to go into the market on Friday on the last day of the month to try and make it back, right? Like, at end of the week, -2R, I'm totally okay just going into the next week with a loss, because I always know that there's going to be another opportunity. And I think that eliminates a lot of FOMO. The markets are always going to be moving. When I realized that, though, was because I blew my accounts consistently for the first 5 years of my career. And I just realized, like, the markets are still moving without me, whether I'm in the market or not. So I think what happens is a lot of people deposit money into their account or fund a challenge, fund an evaluation account, and they think that they need to be in the trade now, because if they're not, the market's all of a sudden going to stop moving, if they're not running the challenge. But the reality is there's always going to be another opportunity, whether the market is trading at, $40,000, 40,000 points tomorrow, NQ could jump overnight double. There's probably still going to be an opportunity where you can place asymmetric risk reward on whatever time frame you're using. You just adjust the position size accordingly. So to me, the market there's always another opportunity. I don't have to be in a trade all the time to be able to capitalize on those opportunities.
I agree.
Somebody's saying, have you ever had months where you had no trades or only 1 or 2 trades? Very rarely.
Not no trades, but definitely some months fewer than others. Definitely have days where I don't have a trade, but I don't even think I've had a week recently where I didn't have a trade. So I
Yeah,
think that's
and I'm
kind
not
of where
perfect
I'm
either.
at.
There's some weeks where I'm like, I'm not going to take a trade, and then I find myself in a trade. But I
Yeah,
still
sure.
I'm still manage it appropriately where if I do take a loss, it's not like the end of the world. Where I'm not blowing up my account, I'm not over leveraging. I'm still respecting the risk. But I
Yeah.
will know that I'm going to make a mistake and take losses.
Okay.
And that's something that I learned over the years was even the most veteran traders, we still make mistakes.
Yeah,
Like,
for sure.
I don't know how it was like for you because you obviously had those accounts for how long? 9 months, you said?
9 months. Yeah.
Yeah. Like, how many mistakes did you make in that 9 months time span?
Too much, but luckily it was pretty decent. I think maybe a nice statistic then to kind of prove so is in those 9 months, I think most of the accounts had around 60 trading days. So over those 9 months.
Oh,
Um,
wow. That's not a
yeah,
whole lot of trading days then.
that's no, it isn't. So that's kind of to prove the point that on those accounts, I really wanted to only take the best of the best and be very sharp. So in 9 months, I had about 60 trading days.
Oh, wow.
Now,
Yeah.
obviously,
Because
some
for
days
me,
I
in
play the
like
one
three
account
months,
and not the other,
yeah,
but
me in
yeah,
like 3 or 4 months, I had like 60 trading days. But that was because I
yeah,
was trading every single day almost. And
yeah,
I don't know, maybe my run was mentally more draining because I was in the market almost every single day. Like I was trading the AM session and the PM session. But that's
yeah.
because
I couldn't have done
really
that.
felt it was because I really felt in sync with my processes and I was in the right mental place. But after the run ended and like the money hit my bank account, I just felt so burnt out. I still feel burnt out right now.
Yeah, I
Like
feel you.
it's
Yeah.
very hard for me to even look at the markets and like get excited about it because
Mhm.
if you could end your trading year right now and probably
Yeah,
be okay with it, right?
yeah. I don't mind. Yeah, I
Yeah.
would have signed
I
up
mean,
for it in
yeah,
the
obviously
beginning
you
of the
don't mind,
year.
but like I still want to be someone active. I don't want to be rusty, but I just don't have the same
Mm.
enthusiasm to show up to the charts every single day and put in that same amount of effort. Because when I was going on that
Yeah,
Apex run, I was like super dialed in. But I think Trader Kane had mentioned this too. He goes through periods of like hyper focus and then hyper burnout. So he'll be hyper
I
focused for a short period of time. Maybe it's a month or 2 months where you're just locked in, dialed in. But then you go through that burnout stage where it's like, I kind of need a break and I need to go on a
yeah.
vacation or something.
Naval Ravikant has the saying, which I really like a lot, and it's most people say that life's a marathon, not a sprint. But that never really sat right with me. And Naval, I once heard him say, life isn't a marathon, it's a sequence of sprints followed by long rests. And I think in trading as well, and I think even in life, that's a way more accurate description. It's you go all in. So I went all in for these last 9 months, and I just tried to make as much money as possible. And now I feel like I'm at this at the rest point where it's more important not to just keep running in the same direction. But for me now, it's probably more important to rest, to zoom out, to figure out what is the next direction, and then sprint in that one. I think just keep on trying to sprint is it isn't the smart way to go about things. I don't believe so.
Yeah. So, like, what does your rest period look like? For me, I just try not
Not
to
sure
think
yet.
about the markets too much. Like, I'm done studying new concepts. I'm done really diving
Mhm.
into back testing. And my journaling is very, very straightforward. Like, my journaling, I'm not deep diving into every single trade idea. If I lose on a trade, I lose on the trade. I just write down my thoughts. I write down my emotions. And as long as my
Mhm.
process and my emotions are in check, that's all I care about because it allows me to
Yeah.
reset and allows me to just get back in sync for the next trade. Like I don't really care so much about that last trade. And I think as an educator, I get a lot of traders that send me chart analysis and trade failed trades, and they're like, "What did I do wrong here?" And sometimes when I look at it,
Mhm.
I'm like, honestly, you didn't do anything wrong. It's just
Can happen.
it's just you not accepting the fact that you're going to take losers in the market.
Mm-hmm.
When I look at a trade, I'm like, that was an A+ trade. Why are you so concerned about what you did wrong? Because you did everything right. And it's
Yeah,
trying to
it's
get
all about
them
the
to,
expected value.
yeah, it's trying to get them to shift their perspective of the markets, where if they take that same trade 100 times, they might lose on
Mm-hmm.
40% of them, right? But overall, their
Mm-hmm.
profit and loss, their equity curve should be higher at the end of that 100
Mm-hmm.
trades. And I think, I probably spent way too long not journaling my trades, like 4 or 5 years. Everybody would say, it's very important to journal your trades. I just didn't have the energy to do it. Maybe it was because I was taking 20 trades a day. And when you take 20 trades a day, you don't want to journal 20 trades. Like you can't even
Yeah, for
remember
sure.
the first five. So
And
for me, I'm
I
like a
also
one and
think,
done trader. For me, I'm like,
yeah.
I'll take 1 or 2 trades on the day because then it allows me to journal at least.
Mm. I also think that gets back to like in the beginning we talked about people trying to overlearn, and I think this is also a bit of that. It's just so much easier to learn by reading and by listening to podcasts and by doing those kind of things than it is to backtest, to journal. Those things are way more exhausting, and that's why I think people just do them less and focus more on the learning part that they like a lot. For me personally, that was the case. At least I like to learn by reading books because I like reading. I like to learn by listening to podcasts because I like doing it. But I, for example, waited way too long. Oh yeah, it's the same story. Waited way too long with journaling. I waited way too long with backtesting. When I started backtesting, I didn't do it properly, um, and I should spend less time learning to say so and more time actively learning and more
Yeah, like
time
actually
backtesting, more time
executing
journaling.
and learning,
Yeah,
executing and
doing
learning from
doing
those
stuff.
trades. Like
Yeah.
that to me was a very difficult part as well. Was that I was just
Same.
executing so improperly that I couldn't really learn from those experiences because I was breaking every single rule in the
Mhm.
book. So have a very strict set of rules. Like I'm only going to take 1 to 2 trades a day and just journal those trades. It doesn't take a whole lot of time. And you're going to really find out like what your biggest weaknesses are. Because for me, the things that were holding me back the most, I just wasn't holding myself accountable to them. So if I was over trading, I would say, it was just, it was just one day. I'll get back to a regular process on the next trade or on the next week, and I just never did.
Mhm.
So I just kept making the same mistakes over and over and over again. You really
Yeah.
have to like identify what your biggest weaknesses are and just trim them out, stop doing them entirely, and just have a very simple process. Because for me, at the end of the day, the
Mhm.
market's either going to go up, down, or sideways, right? You're just making an educated
Mhm.
guess and you're managing your risk.
Yeah. Agreed.
So I don't know
Yeah.
how much longer we're going to stay on here. To me, the market looks a little bit bullish right now. So we've traded back down towards the weekly open. I guess we'll see if this market does turn around on the day. I'm not
Mhm.
super confident on it just because Fridays are somewhat slow. But obviously, we still have the open coming up. So
Yeah. I'm not touching it anymore today either. But we can go through some questions in the chat.
yeah.
Can you show your indicator, please? JadeCap.
It's ICT everything. It just plots the midnight open, the weekly open, and then the deviations, Asian range deviations. It's basically just default settings. I like using this because when I'm anticipating, a bullish candle on the day, I'm trying to buy it below. I'm trying to buy it anywhere below midnight open. So really, if
Mhm.
that market trades lower, you know, I'm able to set myself up where I'm getting in at the best price possible before that candle flips bullish. I think when was it? Yesterday? I think it was on ES actually. So if I go to ES, because ES had more of a dump yesterday. So here's our midnight open. Oops. So here's our midnight open. Obviously, and this helped me with my journal, was by the end of every day, I'm just trying to see what the market did. Buying it below the midnight open, like let's just assume you bought it below the midnight open. Compare that with somebody that bought it above the midnight open. Right? Who's getting the better price and who's maximizing their risk reward? Obviously, somebody that's buying it at a discount. So just having this picture in mind, like if I'm bullish, I want to buy it below the open. And if I can't get it below the open, then my risk level is much higher. And that trade has a lower probability of it panning out. So when the market, if we look at all these daily candles, pretty much every bullish day starts out bearish or puts in a lower wick at some point. And your goal as a trader is to try and get in at a price that is at or as close to that open as possible. Because let's say if I showed up to the charts and this daily candle was all the way up here and it was, printing all the way up here. What are the chances that I can get on decent risk reward? Let me just turn a replay on. Let's say if I come to the charts in the morning and this daily candle is all the way up here already. What are the odds of me going long here with a stop that's here that this daily candle is going to continue higher, right? And it's like the same thing when I look at where we are on the monthly time frame. Like, what are the odds that this monthly candle in the last 8 hours is going to expand much higher than where we are currently? That run might have already been capitalized on, right? Because if you're trying to get long on this monthly candle, the best time to go long would have been at the beginning of the month. So if we go back and review our monthly time frame, right? Let's review what happened in August. The best time to buy, all right, this is the 1st of August all the way back here. The best time to buy on this market would have been all the way down here when we're below the monthly open. And then as it starts getting further and further away from the monthly open, the probability goes, for me at least, goes way, way down. So that's just the way that I view the markets. I guess we'll see where we go at the open. I don't know if you're going to stay on much longer. I actually have to go catch a flight today.
I don't mind answering some questions.
Yeah.
I don't mind answering some questions, but if you guys want to see live trades, for me, there is none anymore. Not for today, at least. But I don't mind answering some questions, yapping about some stuff.
Yeah, so why don't you live trade? For me, I'm like, there's zero benefit for me. I'm like, what is this actually doing for me? Like, yes, people can learn, but you're going to learn much more as a viewer just executing on your own. Because if you're always looking for somebody to live, and I'm saying this from experience, and you probably can attest to this too. I don't know if you watched anybody live trading, but I would watch people live trade, and at the end of the session, I didn't learn anything. Like, there was nothing that I saw was applicable to how I executed the trade, because I could go to the golf course or the range and watch somebody else hit 1,000 golf balls. That doesn't do anything for my game, right? Like, I need to go pick up a golf club and hit 1,000 balls on my own. And it's the same thing with trading. I think a lot of people, they think it's like a spectator thing where they can pick it up just by watching other people. It's not like that,
Yeah, and about the live trading stuff, in my opinion, trading is just figuring out the right rules, the right plan for yourself, and then sticking to it. And my plan doesn't allow me to take any more trades for today, or I would be very surprised if price did do something that would allow me to take another trade. So me not taking a trade here, that's just me sticking to my plan. And in my opinion, sticking to your plan is trading. So this is as real as it gets, I'm just sticking to my plan. If the plan tells me no trades, then it's no trades for me.
Yeah, let's see if there's any other questions here. Do you avoid taking trades between London and New York? I tend not to trade during those time periods.
I like trading London, so I often do. Yeah, most of my trades actually are between London and New York.
Yeah, where are you based? Are you based in the UK?
I'm from Belgium, but I live in Dubai, but I do travel a lot. So I'm a bit all over, but mostly I'm in Europe.
Do you like the trading hours in Dubai? I had a hard time trading in Dubai because it was like 5
I
p.m. was New York
didn't.
session.
Yeah, I didn't either. I liked New York for trading. I think, in my opinion, that was the best time zone, the one I
Yeah,
liked the
I'm on the
most.
East Coast, so I can get my
Ah,
trading done out of the way by lunchtime, and then obviously have other
yeah.
things to do with my life. Because
Mhm.
I tend to despise sitting in front of my charts for 8 hours a day, right? I think a lot of people they get into trading so they don't have to have a job, and then when they go full time trading,
Mhm.
they're like, I need to trade every day, all day for results. And just from my experience, I actually make more money when I spend less time in the markets because I'm less
Yeah.
attached to it. I can actually detach from those trades and let them pan out. Sometimes they're swing trades, sometimes I'm holding them overnight for multiple days. And if it's not on my mind, I have a much easier time not micromanaging the trade. And I think a lot of traders have a hard time micromanaging their positions, like moving
Yeah.
their stops
I
too
like
early,
to
scaling
use
in.
alerts for that. So I also
Mhm.
don't like being behind the charts all the time, because I just think it's draining, and you have a limited amount of discipline and willpower in a day. And I think when you're constantly looking at the charts, you're constantly draining that tank, because you're constantly forcing yourself to, no, I won't trade, no, I won't trade. Whilst if you just set an alert when price gets in an interesting zone for you, or when you have to get back to the charts, I feel like you can save so much time, mental capacity, and this money by just not being behind the charts when you don't have to. I think that's
Yeah.
a big lever.
Somebody was asking, how do you approach the Apex challenge with all the rules that they have?
How do I approach? I think in prop firms in general, it's just so important to read the rules and to understand them and to know what it implies before you buy a challenge. And then once that's done, I think as a prop trader, as a prop trader that's trying to scale, it's important you have some flexibility in your trading plan, that you're able to adjust your plan according to the firm you're trading with. And because it's right that you can't trade the exact same thing with Apex as with funding ticks, as with this, as with this, because every firm has some different rules. So I think a big part of it is having a strategy that has some flexibility to it. And I think another big part is just knowing that you have to answer this question before you dive in. So
Mhm.
I had read all the rules. I had figured out how I was going to trade them. I had back tested it. I had applied my specific data to how I would trade those accounts. And I think those two are the biggest things. I think it's mostly preparation.
Yeah. So for me, like I read through all the rules, which not a lot of people do. But then I try not to think about them so much. Like everybody's thinking about, oh, if you make too much, now you're breaking the consistency rule. Well, just keep trading.
Mhm.
Like that's the benefit of not needing to hit the payout date, right? So if you
Mhm.
have 5 days till your payout window and your consistency is 80%, who cares? Just keep trading it. Like they're so focused on I need to get my consistency within this window on this exact date because they've already spent the money in their mind. Like they've already processed that the money's in their account. They've already processed all these things that has never really come to fruition yet. And they're trying to, they build up this elaborate plan in their mind of what they're going to do with the trading profits, whatever the case is. And
I
then
had 20
they get
trading
blinded by
days
that,
as well.
right? They get so blinded by that. And it's just like, forget about all that. Just keep trading and have a proper process, right? Stay within the other rules. And then when you hit the
Mhm.
consistency, you hit the consistency, whether that's next week, next month, 2 months from now. Like to me, that doesn't matter. Like the end goal is to actually keep the accounts and actually get the payout. It doesn't matter when.
Yeah, my first payout with Apex was 20 trading days, and I think 2 to 3 months of actual time before I finished my first cycle. So yeah,
Yeah.
I fully agree.
But you didn't have like a
Mhm.
set goal of like, I need to get the payout this date.
No, no. Luckily, because yeah, you're right. If I had to, or it's day 7 and I still need another 50K, let's run it up today, and
Yeah.
don't think that would land as well.
Yep. Somebody's saying, what is your advice on trading smaller prop accounts? To me, to be honest, it's all the same. It's just your unit of risk is less. Right. So if you have $1,000 drawdown, you probably only want to risk $25 to $50 per trade, maybe 100 on more aggressive setups where you feel very confident on. But when you get to the bigger accounts, it's the same process. Like, I always try and give myself 20 trades before I blow the account. To me, that makes sense because I know I can go on tilt. I could lose 5 trades in a row. If I lose 5 trades in a row, though, it's not like I'm down 50% of my drawdown. That's unless, if I don't care about blowing the challenge accounts, I'm not telling people that are watching this to full port the accounts. You and me are in a position where we could go full port 20 Apex accounts and not care about it, right? You could just sign up for another 20 accounts because you're treating it as like one trade. So,
but yeah, that's because when you're talking about risk, you shouldn't be looking at so risk, in my opinion, is not dependent on the size of the account or the account balance. It's dependent on your money, on your net worth, on what you have or what you are willing to lose. So it's like that, right? If I can afford to lose 100 accounts and not really be bothered by it, whilst someone else might really need to, make that one work. Or so when he's trading 10% of that one account, that's 10% of what he's willing to lose. Whilst while I'm trading an account,
yeah, let's say this guy's worth $1 million or $2 million. That $2K, the $2,000 in evaluation fees is not even 1% of his net worth.
Yeah, so it's
right.
Just like this idea of that risk should be based on account balance. I just think it's a silly idea, and it's also what you brought up earlier, right? Because when you trade accounts separately, so I traded the big account separately, you traded them all together, you risk 1% per account, I risk, for example, 20%, but you were trading on 20 accounts. So it's the same risk, is just this notion of risk per account balance is just kind of silly.
And that's why I really don't like the question, because I don't know where people are financially. Like, if you are stretching yourself thin and charging your, running up credit card debt, you probably shouldn't be trading, first of all. But then if you're in a position where you can afford to blow some accounts and evals and not really be worried about it, because at the end of the day, the payout of that one account can be much higher than whatever your expenses are. You kind of have to just treat this as a business, and you have to think about your own specific business plan. Where am I financially? I'll say this, probably 70, maybe. It's hard to put a percentage on it, but there's so many traders out there that shouldn't be trading.
Most of them
don't have any money in their bank accounts, that can't afford to trade, really. They don't even have a proper job. Maybe focus on that area of your life. And that was me for a very long time. Like, my professional career wasn't paying me, so I was trying to rely on trading, and I just could never make it work until I actually built up an emergency fund, started getting better in my relationship with money, because I think that's a big barrier to a lot of people's success, is their relationship with money is so deteriorated that they can't make proper decisions. So if you can fix your relationship with money and you're in a good spot financially, you're going to put yourself in a much better position when it comes time to trade for a living.
Yeah, agreed. And maybe one more thing about the small account, large account, it really is the same. And I think I have some friends that trade that when they ask this question, I'm not saying this about the person that asked it, but when they ask me the question, they kind of try to imply that it was different, so they could believe that if they were to trade a big account, it would work. But the matter of the fact is, if you can't pass a small account, you won't pass a large account either. And if you're passing small accounts a lot, then you probably can pass a large account if you're able to adapt to the larger numbers. But the fundamentals of passing an account are the same regardless of the size. It's only the psychology that gets slightly harder when a bigger account.
I would say it
but
gets
it's the
tremendously
same thing.
harder.
Yeah.
Like when you're going from risking $50 to like $1,000 per trade, now all of a sudden, that's the beauty of trading though, that maybe not a lot of people reach. When they get to that certain point, you realize now this is just a mental game. Like you have your edge, and as a trader, you're always trying to scale up and get bigger. So that risk tolerance grows over time though. Like if you're only comfortable risking 20, let's say you're making $15 an hour as a full-time employee. It's very difficult for you to put on $50 to $100 of risk because you're associating that with 3 or 4 hours of work, right? And then as you start maybe climbing the career ladder and getting more comfortable with money, it becomes much easier to put on that risk. Let's say you go from making $15 an hour to now $50,000 a year or $100,000 a year, and now that paycheck is much more, and you're much more comfortable making X amount of dollars per hour. And then you break through that ceiling of, well, money is just a tool and it doesn't really mean anything as far as my worth. That's kind of when you disassociate from money and realize like this is just a unit of risk, which, you know, that's kind of like the ultimate goal is breaching that barrier of like $1,000 of risk can be the same as $10,000 of risk on one specific trade. So if I take this trade right now, if Mathe takes a trade that's $1,000 and I take a trade that's worth $10,000, we put our stop losses in the same place. We put our take profits in the same place. Unless I'm like trading at a size where I'm manipulating the market and it's making the book shift, right? And there's enough liquidity, like it's the same trade, right? If it goes to the take profit, you're just making a multiple of that. That's kind of where your trading takes a leap, right? When you just realize like this is just a unit of risk and I shouldn't be worried about $50 or $100, but it's because your association with money is tied to, you know, the amount of work that you put in per hour. And that's a very hard transition to make going into trading because trading is a business unlike any other. You don't get paid based on the hours you spend.
Yeah, fully agreed. From your experience, what is a realistic average monthly payout in consist?
We just talked about this earlier.
Yeah, it's pretty much the same thing.
Like the thing with markets is you have to show up every single day with zero expectation of getting paid. Because 1 month you could do, let's say if this month I came to the markets every single Tuesday and placed the same trade, I'm going to have wildly different results month to month. And that's the same thing in any strategy. Like you cannot expect a specific return out of any specific strategy. You just have to take what the market gives you because you're not in control of that. What you are in control of is your process. But that same process, if I copied and pasted my same process, let's say if I'm doing the same exact thing for 20 trading days a month, which there's only 20 trading days a month. If I copied and pasted that throughout 12 months, I'm going to have wildly different results. And let's say if I don't meet my weekly or monthly target, that's where you're going to start making mistakes. Like if I'm down 1% on a Friday and I need to make 2%, what's going to happen? Like I'm going to go into the markets, take numerous losses to try and meet that 2% target and maybe end up 5% in the red, all right? Or 10% or a blown account. So you cannot look at trading as like a realistic average monthly payout. That is a very traditional way of looking at work, right? We're not here to pay you a salary.
Yeah, it's so different for everyone as well. But if you really wanted to get an idea about that, about a very gross average, then you could just look at all your backtested data. And I think too little traders do this, but your data should give you some kind of indication on what is reasonable for you. And that's like a big distinction, right? Because everyone trades differently, everyone risks differently. Yeah. So it's all about your data. And if you have enough data, then you should be able to kind of manipulate that and kind of figure out what is a reasonable expectation for you. And then you have to also accept that just because it's an average doesn't mean it will happen every month or even most months. Then you also have to be able to kind of disassociate from that an average doesn't mean that will happen often, or well, 1 in 2 months will be like this. But if you really want
you
it
have to always assume there's going to be some variance. And if you don't want to do the back testing, like maybe do the back testing for a month and just plug it into a strategy simulator, right? And it'll just plot what your typical average results are over time. But I'm always looking at like the long term, right? So, if I have a down week or a down month, it's not necessarily throwing me off track of where I want to go 5 years from now, 10 years from now. It's just one small piece of data on that equity curve.
Yeah, agreed.
But then also, I think it's important to note that when I was trading the sim accounts is not typically how I would trade a personal account.
No, it's a different
Because
game.
like it's very different. Like I treat it like a game almost, because it's not really your money, right?
In my opinion, it's the same as when you trade, for example, NQ options. So yes, you're still trading NQ, but you're also trading options, and you won't make money trading NQ options when you don't understand options and when you don't change your strategy to fit options. And I think it's the same when you trade prop firms. Yes, you still have to be able to understand what you're trading, but there's this additional layer to it, and now you have to kind of make that data fit to prop firms and make your strategy fit for prop firms the same way you would have to adapt when you were trading options or when you were trading some other financial instrument. It's different.
Yeah, somebody's asking, whenever I trade, most of them are stop losses. The day I decide to take a break, all my setups hit take profit and I miss all of them. Well, to me, it sounds like you're burning out. You're taking too many stop losses on one specific day, and you have to control your frequency. Like, just because you're in front of the charts does not mean you need to take a trade. And that's why I always preach like the one and done or two and done mentality, because I know if I show up every single day and follow the same exact process, there's always going to be another opportunity. And you don't want to be so burnt out from taking stop losses and feel like you're on a massive losing streak that you're going to miss the next trade, right?
In my opinion, the statement also sounds in my opinion, when I read that, because I recently had a friend tell me something very similar, and I also just told him you're probably getting tricked by your brain, because it's very convenient that all the trades that you take are losers, and the ones that you were going to trade but just happened to miss, those are all winners. If you just
there's
run the probabilities on
to me,
that,
there's too much hindsight. It's too much hindsight.
yeah. That's very, very unlikely to be true, that all the trades that you take are losers, and the ones you are going to take, but you were just at the bathroom or whatever, that those all don't work out. Then I think it's way more likely that your brain is pulling some tricks on you, and you're getting confirmation bias, you're using hindsight info. But when I read that, I probably don't agree that all the other trades would be winners. I probably think, everyone can pick a winner when price already played out. I think it's unlikely.
When you think in hindsight, it's not beneficial to you whatsoever. Because I know so many friends that should have exited this investment at this one specific time, or could have gotten in early, and when you think like that, you don't even think about how you executed in that one specific moment, which is the most important. It's like, what do I do when I sit down in front of the charts, and how do I position myself inside of a market, rather than thinking about, oh, I should have exited an hour later, or I should have done this, at this specific time. It's all hindsight. Like, to me, that doesn't it doesn't mean anything when it comes as far as your execution. You're just thinking in you're kind of thinking outside of whatever it is you're in control of.
Yeah, I agree. So I think, to the guy that asked the question, I would try to have an objective look back and really figure out, would all those other trades be winners, or am I just using some hindsight? Because it's unlikely that all your trades lose and all the ones you are going to take win. the maths don't really add up properly.
Mm-hmm.
Do you believe AI will eventually replace human traders? I actually do. I think we had the first revolution with like Jim Simons and his medallion fund. So for those that don't know, that's arguably the most successful fund ever. They have the highest monthly return in percentage of any firm ever. They've done it for 50 years, something like that. And they were the first ones to completely make computers trade, so to completely, or one of the first ones to cut the human completely out. And I think eventually AI will do the next thing. There already aren't most firms, most big firms already have some algos running everything, and I think AI is probably the likely future of those algos. So I don't really believe that much in. So on a very large scale, I think probably yes, probably AI will do better.
For me personally, I think there's always going to be room for human traders. Like AIs can't replace human traders. Like there's always going to be a market for human traders. They're probably going to outperform us, but I think there's always going to be an edge for human traders. So I think regardless of wherever the AI space goes, there's always going to be room for discretionary traders.
It's to the question, trading is this PvP game, and you'll most likely always be able to beat some other guys. And so in that sense, yes, but I do think if you're looking at on the largest scale, so for these massive firms, these Wall Street guys, I do think AI will be the next thing.
Someone who's asking, I cut my trades whenever I saw a price come near my SL, and then it will go and hit my TP. Well, that is just emotional decision making, right? So you need to think about your risk as this money has already left my account. And that's the way that I look at it. I always assume that every trade that I take is going to be a loss because it keeps me in check with how much risk I'm actually putting on. So if I'm okay risking $100 on the trade, does it really make sense to cut my trade when it's only down $80? Because I don't want to take a full loss. At the outset of that trade idea, you were willing to take $100 risk, right? So just let your stop loss do its job. You paid the stop loss to do its job. And the stop loss, in my opinion, should be at a level that invalidates your trade idea, right? So if you're a Wyckoff trader, you're probably looking at, market structure and swing low points and swing high points. You should put your stop loss at like a swing low if you're expecting the market to go higher, right? Or below a level of consolidation, something like that. And until the market actually trades to that level, your trade is not invalidated yet, right? So you're not wrong on the trade. You just have to get comfortable the fact that the market can trade against you. But I think a lot of people
if you can't hold it to full stop loss, then you probably over leveraged for what you're able to risk. So,
and then not only that, you probably can't hold the trade to full take profit if that's the case either.
True, especially if you go for that. That was a big struggle of mine because I used to trade very large risk to rewards, so 1 to 5, 1 to 10. And if your stop loss is 1, so 1% of or whatever, but the take profit goes up to 5 or 10. So if you can't hold a stop loss to 1, imagine holding a take profit to 5 or 10. It's it's even way harder. And so I think you're probably over leveraged.
Yeah. I think it comes down to a patience thing too. When did you realize this? Because it took me a very long time to realize this, that sometimes the markets just move slowly, but that doesn't mean that I'm wrong on a trade. It kind of took me a very long time to realize like I might be in this trade for longer than I expect before it starts moving in my favor. Like if I planned out a 3 or 4 or 5 hour trade, I just could not, I guess, compute how long I might be in the trade for. So even if I was taking a daily or a 4-hour trade, I never really gave it any thought as to how long I might have to hold that trade for. Because let's say if I'm aiming for the daily highs up here, if I were to go long, I'm not long right now, guys. I need to like actually calculate. This is on an hourly time frame. How many candles is it actually going to take to trade to that level? Let's say if I go long here and I put my stop loss below the London low, and I put my take profit here. All right, so 2-to-1. How many hourly candles is it going to take to get to this level? Everybody loves to think like their trade, as soon as you place it, that next hourly candle is going to shoot higher to your take profit, but that's very rarely the case. And that's something that I think backtesting cannot replicate, because you can just go in here and hit fast forward. You know, you can just fast forward through 8 hours of candlesticks in like 30 seconds. But that's where traders, they mess up, because you take that same 8 hours in the live markets. Now all of a sudden they're looking at their phone constantly for 8 hours. They're seeing the market trade against them for 8 hours, and they're seeing their money chop up and down for 8 hours. And that's really where traders micromanage their trades. They start making mental mistakes because they can't sit still for 8 hours, right?
That's where the alerts come in once again, right? Because the worst thing, or the biggest mistake I made in such situations, was to just have the chart open and look at it. And my brain was constantly telling me, oh, you know, it's going to go to stop loss. Shouldn't I do this? Or shouldn't I do this? But I knew what I should do. I knew I was going to hold to this level for stop loss, to this level of take profit. And maybe if it still hadn't, you know, closed at 9 p.m., then I would close it manually. But those were the parameters, and nothing. I wasn't going to do anything else. So why was I looking at doing anything else? I was constantly seducing myself, constantly draining myself. So to me, alerts are they really help me out a lot, and being able to just do something else when you're off the charts, because when you're just sitting there doing nothing, you'll constantly think about the trade. But when you have something else to do, so for example, when I ran the agency, or now when I do this, whatever, it helps you not think about the trade. And I think that's important.
That's why I think a lot of traders that are trading full time run other businesses, because there's just no room for making those mental mistakes when you have other things to do. And it could just be, you know, maybe you have other hobbies that you want to do. At least productive hobbies where you can get away from the markets and not really think about them. Because there's some hobbies where, like even golf, I've tried to get into golf, but when I go golfing and I'm in a trade, now there's way too much downtime, and I'm like looking at my charts while we're in the golf cart going to the next hole, whatever it is. You do need something that, you know, or at least if you accept that trade is still open and you have your parameters in place, you have your stop loss, you have your take profit, you have a level where, you know, you say, if it goes to this level, I'm going to trim my stop. But I tend not to do anything when I'm in a trade. Like, I'll only move my stop loss to break even if it's up like 1 or 2 R. And if it needs to move pretty quickly for me to be able to scale in. But otherwise, it's just a waiting game, to be honest. A lot of times if you're watching paint dry, you know, you don't know how, you have no idea how that market is going to trade as it's moving towards your take profit. Like, you have no idea if it's going to go choppy and sideways, and you have no idea if it's going to shoot to your take profit very quickly. Like, those are things that are out of our control. And it's really about giving up that control and letting the market do what it has to do. So I think I'm going to hop off here. I probably don't have anything to add. The open, I think it could go either way right now. I would say I'm leaning more bearish because we took out the all-time high, and we could chop back into the range. That's kind of what I'm expecting, at least to start the month. Like, the monthly candle is going to close soon. Even if I am bullish, I'm expecting a bit of a correction before I turn bullish again. But again, I don't know. I'm not, I don't have any opinion because I'm not in this trade. And the only thing that would really change my idea of that is if we get above, I think, this level. So if we invert this level and then start trading higher, then maybe we target the previous day's high. But on a Friday, for me, very unlikely to print a new high of the week. And I know we have some more news out later, I think, right?
Is it?
Yeah, we have revised consumer sentiment. Are we buying NQ? No, I'm not.
I'm not either, to be clear. But okay, well, then I'll just do some FAQs for the remainder.
Yep, I'm gonna hop off because I gotta get ready to catch a flight. Mathe, it was great
Okay.
spending time with you, man.
Nice to
Super
meet you. Have a
interesting
good
to learn about
flight.
your story. Yeah, super
Thank you.
interesting to hear about your story. Congrats on all the success. You should definitely take a vacation or two to celebrate.
I'm going on a trip with the boys soon, so yeah,
Nice.
we're good.
Awesome.
Yeah, thank
All right,
you.
man. Take it easy.
All right, see you. Okay, so I'll be on for another 10 minutes or so. So you guys can ask me whatever, and I'll try to reply to as much as possible. So we should not trade today at JadeCap. What you should do depends on your plan, but JadeCap and I aren't going to trade anymore. But you should not look at what we do. You should base your decisions on your data and what you know, and that's what you should decide on. What risk percent? Sir, what's the risk percent you are willing to take while you're in the student phase? For me personally, it's a lot. It's pretty much as possible. But once again, that comes down to me being able to buy as many accounts as I want. And, we've said it before, so I won't dive in too deep again. But risk doesn't depend on account balance. It depends on your total resources. And since I am lucky enough to have a lot of resources, I can risk whatever, I can risk 2, 3, 4% a trade on a usual CFD phase 1, for example. But that doesn't mean that you are able to. What's your view on NAS 100? I've talked about this. So what's my view on the NASDAQ? I've talked about this earlier in the session. So once again, I won't talk too much about it. Just generally, I'm bullish. I'm on pretty much any time frame. Only the 15 minutes and the very short-term time frame is unclear for me. So I'm just staying out for now until it lines up. The short-term lines up better with the long-term. Are you from the Netherlands? I am from Belgium, actually, but I did move to Dubai. Belgium taxes are crazy, but I am originally from Belgium. Are you taking a Menti? I am not. Start with your hobby outside trading. My hobby outside trading, I box a lot. So I kickbox. I like to play soccer with the boys, and I just like to read a lot, like to learn a lot. I think those are like the major ones, and then also tend to spend a lot of time with my family when I'm at home. Focus. After how many years did I become profitable? 2. So I had 1.5 years where I just kept on losing money, and then I took a 6-month break. When I got back, pretty much everything clicked for me. If someone has $2,000 to their name and 2 years of experience, what account size should they buy? So you claim to be a break-even trader, and if you don't have an edge, so if you're a break-even trader, then you shouldn't size up too much. So in my opinion, you should trade very small accounts until you feel confident that you're actually a profitable trader, and then you can start sizing up. But sizing up when you're a break-even trader at best, it just doesn't make much sense, right? The goal is to become a profitable trader and then size up. So now it's about getting the reps in to become a profitable trader. Then once you are one, you can look to size up. But for now, I would stick to the cheapest accounts possible, actually, just to get some reps in. Just going to drink some water. How could I manage only getting 2 to 3 setups a month with a 3RR? How much would you risk? Risk, we've talked about so much already. I'm not going to touch on it again. But if you only have 2 to 3 setups and you have a very clear edge on that, it's important that you just size up as much as possible on those ones. Talk about routine importance. In my life, routine has played a massive role. And so for years, I stood up at exactly the right time. I ate breakfast at exactly the right time. I did everything at exactly the right time, the same time. And my days were very planned. And it did help me to be able to spend a lot of hours learning. But now I have a little less routine. So I think it's especially important in the beginning. And I actually do think it's a great weapon, and it is very strong. It's just hard to maintain if you also want a social life, for example. So my first years, I decided to kind of sacrifice my social life to really, get great at this trading stuff and to really live this very strict routine. But now I'm kind of shifting that, so I'm kind of giving up my routine a bit to get a little bit more of a social life back. Can you help? If someone has just started futures trading, what would you recommend to that person? The question is so wide that I don't really understand how to answer it. So if you could be a little bit more specific, I'll have a look at that. What's your age? I just turned 23 yesterday. So I'm 23 now. I see also, I'm just going to show you guys quickly. We have a very big dip in the NASDAQ. And that just goes to show to the importance of the lower time frames as well, right? Because we were looking for buys, but both Kyle and I, we both said we didn't feel comfortable yet. And this is exactly why, right? Even if we're long-term bullish, you still have to be aligned on every time frame. So now I'm very happy with this price action actually. Also, we see, as I said, like an hour ago or whatever, that I would be interested in buying here if we were to get an accumulation. And I actually do think we might be seeing something like this, but then for tomorrow or even the day after, where we might be seeing something like this, where I'll be trying for buys here, 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 all the way up. But this is not going to play out today. I'm pretty confident. And we might also just dip lower. But if we were to see something like this, then I would be pretty happy tomorrow. So Monday or Tuesday, looking for buys. What about gold? I haven't looked at gold for a while, but I'll have a check. I'll say one interesting thing about gold is I talked earlier about the situation with the Fed, right? About Trump versus the Fed and how he's trying to kick him out. And there I have to say pretty much whatever happens is good for gold because either Trump succeeds to kick out the Fed and then it brings into question the independence of the Fed, which will increase uncertainty and higher the gold prices, or he doesn't manage to. But we will probably still get the other Fed, the new Fed that's trying to raise and that's going to lower the interest rates. And once again, that will also push gold up. So over the long run, I'm very bullish on gold. But trading it currently, I haven't looked at it for a while. I might be looking at something like this. We have accumulation. This is probably another accumulation on the small time frame. Then we break the structure here. So now maybe if we get back to this zone, I might be interested in looking for buys, but I generally like to trade NQ more, so I probably won't be in any of this. But if I were to look at something on gold, then it would be this. and I would not try to sell this one right now. Okay, I'll take a couple more, but then I really have to go. What do you prefer, futures or CFDs? Obviously, trading futures is nicer because the price feed is fixed, so they can't slip you out, or it's way more obvious. So I think trading futures, the conditions are better. I do think, however, the futures platforms, like I think Trade-O-Vate is pretty ass, especially compared to C-Trader or something like that. But generally, I think futures are nicer to trade. Do you touch crypto markets? It's a good question. I actually have a completely separate crypto strategy, but we won't have time to get into that. Maybe next week I'll touch on this. What about euro? I barely trade EU anymore, so I'm not going to talk too much about that one. High level overview of your strategy. And then the one technical resource that helped you develop your strategy best. I don't want to get too much into the technicals because I really believe it's only such a small part of trading. And I know most of you guys are most interested in the technicals, but I really believe that it's such a small part of trading, and that your strategies shouldn't just be based on technicals. So that's also why I'm kind of not inclined to answer these kind of questions. I did put out a tweet a while back with some of my favorite resources, so I'll also mention those here. But I do think an understanding of basic statistics is very important. Harvard has a free course on statistics on YouTube. I think that one is very important. I think Charlie Munger's Almanac, so Poor Charlie's Almanac, I think that's a great book. It's obviously written by, or it's a combination of his speeches. And I think that's very interesting. Obviously, since I trade Wyckoff, I read a lot about Wyckoff. That's also helped me a lot. And I think those three are solid to get started. And maybe if there's a lot of demand for it, I'll take some of my favorite books with me next week. What's the biggest mistake most break-even traders make? You might know what's common in them. I think, in my opinion, it's probably not doing enough backtesting. And if you're doing it wrong, I think really a lot of your edge is made in your backtesting, your forward testing, and your journaling. But most traders tend to really dislike those things, because they take a lot of practice, they take a lot of introspection, and introspection especially is hard, especially if you're constantly losing. So I'd say if you're a break-even trader or even a losing trader, you probably should spend more time backtesting, forward testing, journaling. I think those three are probably most important. Do you have a YouTube channel? Yes, I do. It's Mathe. Do you trade ICT or simple price action? I wouldn't consider it ICT. And once again, I don't just trade technicals. So I also don't trade simple price action because I keep a lot of concepts in mind. It's what Charlie Munger said in the book. I hope some of you guys will read it. But he preaches a multidisciplinary approach, so where you take certain aspects from certain disciplines and you mix and match and you make your own thing based on multiple disciplines. And I think that's what sets me apart, and that's what really helped me. Is you don't want to just only do technical analysis. In my opinion, what helped me was to get a clear picture of everything. And so not only technical, but also fundamental, also statistics, also understanding the propfirm model. You want to understand a lot of things and take the most useful of this discipline, take the most useful of this discipline, mix and match it, and then you can really produce an interesting strategy. Did I consider other tax havens? I did, yeah, but UAE is very convenient. I also like it there. So I live there a couple months a year in the winter, and I think it's phenomenal. I think it's really overhated. I loved being in Dubai. How did you realize that you're profitable? It's just backtesting, and then applying statistical research to that data. And then you want to have statistical significant data proving you're profitable. So as you guys know, I keep talking about statistics, but I really believe them to be important. And so, it's about backtesting, having enough data, and then you check if the data is statistically significant. If it is, you have a profitable strategy. So it's not about how many months, or it's not even about how many trades. It's really about statistical significance. Once again, we have like 5 more minutes on the session, so I can't dive into it. But look it up. Statistical significance is a really important concept in trading and in life in general. Which is easier to pass, CFD or futures? It really depends on the challenge itself. But to answer your question shortly, I think the best account currently on the market, especially for beginners, is I'll share my screen, is the Funding Ticks 50K Pro Plus. With this add-on, and then the 35% off, it's around $50, I think. And to get this account, in my opinion, currently it's out of CFD and futures firms, I think this is the best bang for your buck for a beginner currently. And also the Apex discounts are very nice. Then the next futures rapids are also quite nice, but for beginners, I think this one, especially since it's so cheap, so you can really get a lot of practice in, get a lot of reps in, and get it very cheaply. And I think that's very important. You learned Python. Yes, I can code in Python and C#, and I actually do think it helped a lot. What sort of fundamental news releases do you pay attention to? All of them, pretty much. Whatever I think is important. So obviously you have the Forex factory, and you have to know these when you're trading prop firms, because prop firms use this. So you have to know which trades to close when based on this news. So you have to be up to date about the Forex factory. And then I think if you want to learn about fundamentals, just trying to understand the red folder news, why it impacts the market, I think that's a great start. I think CPI is probably the most important. And the most important concept in fundamentals is probably interest rates. So if you had to learn about one thing for fundamentals, then it would be interest rates and how those are affected by, for example, CPI. How much RR a good trader makes a month on average? Better if you can share yours. Don't know mine by heart. So how much RR does a good trader make a month is pretty hard to say. It's also not super relevant when you're trading prop firms. So it is very relevant, but in my opinion, the most relevant thing is how much you put in and how much you put out. So I'd rather be the guy that makes 5 RR but makes $20,000 than the one that makes 20 RR but makes $5,000. And so in my opinion, the most important metric is just profit. So it's your trading payouts divided by your trading costs. And my average depends on if you count the Apex account, because the Apex accounts, they cost me almost $4,000. They paid me 700 and a bit. So, that's an absolutely crazy ROI. But if we skip those because they might mess up the picture overall, then I think about 1 to 5 is reasonable for a profitable trade. So for every $1 you put into challenges, I think it's reasonable to get 5 back. I'm personally even a little above that, but I think 1 to 5 is a very solid goal, and it's actually doable. Have you married? No, I haven't. How did I manage personal life? To be honest, I just didn't. I decided that I wanted to get rich more than I wanted to get married, to say so. So I sacrificed pretty much everything for this. And I'm not saying you should as well, but to answer the question, how did I balance my personal life? I just didn't. Not saying you shouldn't, but that's what I did. If someone's low on cash, they should buy 50K future account instead of 5K CFD. I don't exactly know how much a 5K CFD is, to be honest. Haven't traded such a small account in such a long time. Let's just take the usual two-step, $36. Okay, so immediately when you look at this, you see the price is a little cheaper, but you get $500 of drawdown, whilst with this one you get 2K. And I think these are pretty much equally hard. So I don't think, it's what I said earlier. I think this is the best account in the game. And now the only thing that I might say is if you're a negative trader, so if you're losing money and you know that, then you shouldn't get this one. Then you should just get the cheapest possible. Because if you're losing money, you just want practice. You just want to practice with as little money on the line as possible. No mate by RR, I meant to say how much percent. I've been over this like 5 times already, so I'm not going to bore the other ones with that one again. How old are you? I just turned 23 yesterday. You have to be a little insane to achieve. Yeah, you have to sacrifice a lot to become a full-time trader. At least I had to. Maybe you're way smarter than me, or maybe you figure things out that I haven't. But I had to sacrifice a lot to become a successful trader. How long do you think it might take someone to get profitable with a good mentor? I did it in 2 years. I think most people take more. For most people it takes longer. But I don't know, to be honest. I think it really depends on so much things that it's hard to give an estimate. Okay, it's 3 minutes for 2. So if you have, I'll take 1 or 2 more questions and then I'm a head out. So if you have any more questions, feel free to send them, and then I'm heading out in a minute. When did you start trading? Which year? I don't know the year. It's around 5 years ago, so I guess it's about 2020. It was it during COVID? I think it was during COVID I started. So I think about 2020 I started trading. Thank you for the happy birthday wishes. Okay, then I think that's about it. Thank you very much for tuning in. I do have a YouTube channel. Yes, I do have a YouTube, and I'm also pretty active on X. So it's Mathe Wieme and Trader Mathe. Okay, so yeah, I'm just going to close the session. Thank you very much for watching. Thank you very much for the questions, and I'll see you on the next one, perhaps.